Hi, good morning. David Moore with Equity Advantage, and I've got Robert Smith of Peregrine Private Capital here again today, and we're going to talk about all kinds of good stuff, huh, Bob?
All things DST, Dave.
All things DST. Well, we got a little bit more to talk about. So when we were getting ready to start today, we were talking about, I've got a friend that had done a flipper down in Redwood City area, and I should have asked her what she paid for the thing, but when you're looking at a 2,000 square foot house selling for $2.5 million, it sort of puts things in perspective, and I think, last time we talked a little bit about the universal exclusion, I think, and the 250 and 500 that was put in place in 1997, and what that probably should be today. But it's obviously a different time, a different place, and the 250 and 500 doesn't cover much of anything anymore. But we were talking about where people are, where they're headed with stuff, and we just finished up our 30th year in the business, and we're having a good time with it. It's been very, very busy, obviously, and lots of people moving out of one area and into other areas.
Understatement.
Yes, and so the biggest problem we've always had with 1031 is time. And it goes too fast. 45 days, that ID period that people have doesn't really cover much. And in a market like we're in, nobody's going to sit back. So obviously we have people looking for things before they sell, so they don't have to be trapped in that or lose an exchange because they couldn't find anything. And I think that's one of the things, obviously your business, tell me what's happened with your business in the last year, 2 years' time, Bob?
Our business has exploded. Simply because of people are now realizing values for the properties that they never thought or never imagined were possible before. And then in addition to that, the progressive governance breakdown on the West Coast, whether it's Seattle, Portland, San Francisco, to a lesser extent LA, has caused a mass out-migration of rental property owners and leaving the West Coast, left coast, and going to points distant, primarily red states, simply to go someplace where property rights and landlords enjoy more protection, more respect, and someplace where valuations are more reasonable from a pricing standpoint, because, as you just mentioned, West Coast and its developmental limitations that were put in place years ago have really, really created a supply crunch from a housing standpoint and have resulted in prices that are not affordable for most people. So very busy, big outward migration to other places.
So, we look at it, I know you worked on one of these transactions, a client that had, roughly $30 million disposition. So phase one's what people are relinquishing, phase two is what they're going to acquire. And typically somebody in that type of dollar range, they're sort of coming to you for residual amounts, right? They're not planning to bury the full chunk with you on DST type assets typically. But are you seeing more of that? I know we've done that a couple times in the last year, but that was one transaction that really came to mind that was a different idea for us.
That's the biggest change we've seen, David, in the last 24 months is the capital aggregates going into DST properties have gotten much, much bigger. And people that otherwise would have looked for another property to self-manage or have managed by a manager are now saying, hey, look, there's simply nothing out there that makes any sense from an economic standpoint. If I actually do a turn myself, I'm going to end up buying a property that is of lesser quality than what I just sold, and I'll be paying more for it. So the DST option for these people have become much more compelling because, again, they can go to someplace else where prices are more reasonable, and they can also, the biggest strength, their biggest advantage is they can diversify. And most of these people have been in the game long enough to know that this is a bubble. That's why they're getting out. They're realizing prices they never thought were possible before, and now they're going from the how can I make more money mode to how can I hold on to the money I have made mode. And the great strength of DST, of course, is your ability to diversify because of the fractional nature of the ownership interest, which is something you simply can't do as efficiently by yourself. So indeed, we are seeing much, much larger capital aggregates, 10, 20, 30, 40, 50 million going into DST property portfolios now. That is a substantive change.
Definitely. So in that transaction, Bob, I mean, from what I remember, you were actually referred into it by the broker that had sold the asset, correct?
That is correct.
And so we're talking, and that historically has not been the case. I mean,
No.
usually the brokers in the commercial space are looking for places to plow that money into.
Right.
But in this case, at this point in time, I mean, what was that broker was just really trying to give the client a good place to go to keep his equity intact.
Yeah, I think that was Greg Frick, HFO, and just a total integrity guy in terms of he understands how difficult the environment is now for replacement properties, and so he wanted to give his client all the available options. And literally after turning over every stone locally for replacement property, they just couldn't find anything that made sense for his client, so they went from plan A to plan B, and his client was able to save his exchange. And so we are seeing more of that. I mean, most people do what they're economically incentivized to do, and commercial brokers certainly are going to try to place that money themselves. But in this environment, in a super overheated environment, it's just become very, very difficult to do. And the nice thing about DST is there's always inventory. Mm-hmm. Therefore, your exchange should never fail. There's always inventory. It's simply a question of where it is and what it is. Yeah. And so I think the people, the brokers that are putting their clients' capitalism, their investors' capitalism in place of their own or in front of their own will make sure their clients know that that is an option.
So I think one of the things that comes up in my life, and I'm going to bring it back to me, of course, but there's sort of the proverbial chimpanzee, right? You're not going to let go of this until you got that next vine. Right. You don't let go here until you got this one. And I think we all see properties out there that we know are unwanted, or you've got people, investors that might be unhappy with something. They need a place to go. And I think that DST is something that for the last couple decades, honestly, when we're looking at fractional ownership, that institutional vehicle, whether it's a TIC or now the DST structure, I think there was sort of aversion to certain regions of the commercial real estate world where they didn't want to open that up, wanted to control it. Where today, I think more than ever before, you got to give people a place to go and a reason to give something up. Because if you're looking at, and especially, I mean, right now, just for context, the audience, we're in November of 2021, and we've had some tax reform stuff passed. We have that big one that's still up for vote. We still are not totally clear on what capital gains tax increases may occur, and if they do occur, when they're actually effective. And that initial bill was to be effective 4/26/21. So I think one of the reasons we've been so busy, and you probably agree, is people have been doing stuff in anticipation of an increase in tax rates, but we might be in a space where it's been too late for months now. Right. But I can't imagine. What are your thoughts? I mean, the likelihood, and I mean, we're just talking here, the likelihood of the government actually being able to go retroactive on something. I mean, wouldn't there be lawsuits everywhere, it seemed like? I mean, how can you do that?
Practically speaking, they can't. It would be a litigation nightmare, and it would be so hugely unpopular from a voter standpoint. And given the fact that Biden, 10 months into his administration is already a lame duck, I think the likelihood of that happening right now is slim and none, because, again, it would be, practically speaking, a litigation nightmare, and it would be some of the most hugely unpopular legislation ever passed. So I think that as time goes on, the likelihood of something like that happening in a retroactive manner becomes less and less. But that's just conjecture on my part.
So you combine that with all the talk of going mark to market on stuff too. I mean, those two right. components alone. if you've got a sale pending at this point in time, you got to really work this out with your tax people. Understand what's out there, where they think you might be going, but take advantage of your tax professionals, because they're going to be very important going forward with this stuff, especially depending on what gets passed. But any other thoughts on that before we take a couple-minute break?
Well, I think, you mentioned just prior to that the fact that, control historically has been an issue with regard to buying and selling commercial real estate, and that's obviously a critical component of the process. But I think the reason why the DST space is getting so much more traction now with bigger capital aggregates than it has before is we're 20 years further down the demographic curve. And when you were kind enough to help us introduce this product to the market in the Pacific Northwest 20 years ago, we made a point of telling commercial real estate folks that we're not a competitive product. It's a synergistic product, meaning we can be your investor's end game. And that didn't resonate 20 years ago. Now everyone's 20 years older. The ownership population is aging, and so now it resonates as a possible solution to them staying in the real estate game, not paying capital gains tax, but finding something that is more in sync with their retirement lifestyle. And so I think it does capitalize sales on the front end for many commercial real estate brokers that wouldn't otherwise be there if they couldn't show their clients an even less painful option from an exchange standpoint. Yeah. So there is now much better synergy between the two groups than there has been heretofore. So I think it's a very good point that you made.
Well, you're making the good points. So, thank you. David Moore with Equity Advantage, Robert Smith, Peregrine Private Capital, and we'll be right back.
Phone and I'm nervous and confused about